got slammed today. And I do think data tells the story. Over the past year, Jerome Powell and the Fed have continued to say, you need to watch data. The data will guide us. And we saw CPI maybe have its worst print, basically going back into almost last year of June. When we look at core CPI month over month, we did see a slowdown on inflation, and on some areas, a little bit of a rise. Now, the question is going to be, how does the Fed interpret and digest this data? But when we look at key levels, bullet points on the stocks, and on these charts, I think you have a little bit of guidance and kind of a roadmap of what you should be looking at. Because I don't believe the bad part of this has even happened, if it's going to happen here. So that's what we're going to be looking at. That's what we're attacking. Let's get to work. So first things first, as always, we go directly into the charts. We look at what's happening here. Now let's go really quick to like the 4 hour, 2 hours, something like this. So you can see a few points. Then we had that level right here, that 16.8 level. It's going to be very big, so make sure you're paying attention. You can see we had those multiple tests. As you zoom in, you can see as well. So what you see happen here, you get a breakdown, and then look at this. Now we go into something like the 15-minute, and look at that action that we had. Remember 16.8. So you break through. Market opens here at 8:30. You get a lot of buyers shocking the market here. And you get buyers pushing tech back into 16.8 or 17.8, and you reject. And then the rest you got to push down. Now here in the after hours, you came and found support right here, 17.56 roughly. Again, a level we've had established. And again, this is just your local lows that you had back here. And was also like a little swing high and pivot point that we have there as well. You can see buyers are finding, support there. They're showing up. It was a bounce or die territory. You lose that, and you're probably dropping down to 17.3, a little bit deeper, probably, very, very easily. Then we go to ES. We look at what's happening here. Again, very simple. 50.29. That was our all-time high from 2021. You broke below that. You go into something like the 15-minute, and ES today never really looked good, right? You break that level, you pre-market, 7:30, CPI comes out, boom, you reject, push down. And then you just kind of make lower highs from there all day long. You come into VWAP and you get rejected. You push, and you're breaking back down. Now, again, the big level here on ES, in my opinion, is going to be down here locally, 48.80 if we continue to get selling. And these points are also going to be on Twitter, so make sure you check them out. I'll have all this mentioned so you can see everything I'm looking at, everything I'm watching, right? So again, and that link is down below. But that's what we're looking at there. Now, another thing I do want to talk about is the data that comes in line with this. Now, something that we've been tracking is green versus red days. Now, I like to have as much of an edge as possible. So when we look here, we know Tuesday and Wednesdays are the worst performing days of the week, or percentile last 52 weeks. Tuesdays, typically a 45% chance of being green, the worst day of the week for bulls. Wednesday, close second. Now, that's not surprising because that's when data usually is released. So again, we still closed red. You still didn't like what you saw there. And again, you probably get some follow through into tomorrow as well. But there's something we have to pay attention to when we go to that as well. So we keep an eye on that. The last one I track is going to be IWM. Now, IWM, you wanted to hold above $200, and you could not do so. You can see the rectangle you've been trading in the clear range going all the way back to April 2022, right? And you're still in that range. You try to get the breakout, mid caps try to break out, boom, and you sold back down. This is a really big warning sign for caution because the risk on metric was there. Data came out bad and sellers stepped in immediately. When you look at volume here, you can definitely tell here on the daily that volume to the sell side was very aggressive. Probably the most aggressive selling that we've had going all the way back to December. Honestly, it's just pure sell side. It goes all the way back to like last June. Again, that's just pure selling volume that came in on IWM. I don't find that coincidental either at this data. And when we look at the charts, I don't think they're really that bad yet. I really don't. You saw some initial selling. We saw some continuation throughout the day, but it wasn't terrible. Buyers showed up where they had to. And if we go and we'll look at the higher time frames, you have to make a lower low in order to really be bearish. But the biggest things we need to be tracking right now is what's happening over the next few days. Because we had some bad CPI last reading in January. But what saved us was Fed came out, Powell came out, says he wasn't concerned about it. It still looked good to the market. We're still making progress. He's focused more on PCE. So I'm not going to negate this and say that it wasn't, it was good news. But again, where you'll really get continuation and real selling is going to be when you see the Fed give their take on it. Once they start to break down their opinion, that's where you're going to see the market really digest this. Now, you're going to see here in a few minutes that the market already priced in that there's no cut in May now. Those expectations are gone. Now, again, I said that that'd be the earliest. I do think June, July is the set time when you're going to see that happen. But still, that's what you're looking at right now. And again, this is like, is this a speed bump or is this a roadblock? That's how you have to be looking at this. And we won't really know until we hear the Fed talk specifically about it. You have the White House's opinion. You have all these other biased viewpoints that continue to push a narrative down the throat of saying, we got to cut, we got to cut. But what did Powell say at the last Fed meeting? He's resilient. He doesn't care about anyone else's opinion. He's not affected by politics, said on 60 Minutes. He said he's going to stick to their plan. They're going to follow the plan, and they'll cut when they think are necessary. And right now, he already said that growths need to be restrictive. We need that to still be there. So again, I don't think the outside influences will affect this or impact their decision. It's all going to come down to this data. That's why, again, I encourage patience as far as going back to the long side until it's on swings. That's what I mean, longer term position on day trades, until you hear Powell's statement, because it'll give you a lot of direction and really clarify everything. Number one, let's go to DXY, and we're going to get somewhere here. So we had the inverse head and shoulders played out. We talked about how you were just sitting on the neckline yesterday and you shot back up. This was a sign of concern. But this isn't what concerns me just yet. Okay, DXY does look concerning. Again, I agree. But again, this is what concerns me. We've been trading in a range, and guys, I promise you, I try to be as non-biased as possible. But this has to concern you. The fact that you're trading in this range and now you've broken out of this range, right? 4.4 or 4.42, give or take. That was your 2022 high. So the fact that you're breaking out of this is a sign that you need to be concerned and cautious. Not a good look. You don't want to see this right now. Personal opinion. Okay, so really quick, that's a sign of concern. Going to the economic calendar, showing you what happened here. This was all your CPI. This was the one that was really concerning, core CPI month over month. And again, you haven't had this bad of a reading going all the way back to last year, right here, right? June 13th. That was when you had the last bad reading, right? That's not good, right? It's been dropping to 4.4 for a while now. So those are things you have to be watching, you have to be viewing, okay? So paying close attention to that. Now, again, you go back, you can still see everything still rose. CPI year over year just stayed overall flat at 3.9. So I am watching this. We'll keep viewing this. But again, not ideal. We want to hear what the Fed says specifically about this. You want to see if yields continue to rise. The continued rise, it's a giant red flag. I do think this could potentially be a trap to the upside and the short term, but we'll have to wait and see. Again, not hammering short trading crazy, but you need to be paying very close attention to that. Now, the last subject we're going to cover are specific equities and what we're watching there. Now, there's a few that have my eye on for downside and still some names on the strong side. But this is what I want you to know. I say this all the time. Some people, times we listen. Sometimes we just ignore it, throw it out the window, and just do whatever we want. So, do whatever you want. But I'm going to tell you right now. If you're going long, it sounds really simple. But for some reason, we never listen. We want to go long on the strong names. We want to go short on the weak names. Meaning, if I want to play downside on the NASDAQ, do I want to be shorting NVIDIA? For me, that trying to swing, hold, ain't like that, it's going to be difficult. Everyone was wondering, well, why is NVIDIA bouncing? Well, again, it's one of the stronger names on the market. SMCI, I probably don't want to short that one just yet. However, I look at other names. I look at other names across the market. Tesla, you rejected, pretty gross, right? You can get a broad view of the market and where we're at, and under key levels, etc. So again, focus on shorting the weak names, focus on going long on the strong names. That does not mean be unbiased, YOLO, or anything like that. But it means if you're going to pick a direction, focus on a name that's trending in said direction, okay? Understand that before you start attacking any other views. Because again, I'm trying to reduce risk on every single trade. I'm not trying to increase gains. I want to make money, but I also have to understand my first and primary goal has to be to protect my capital at all points in time. Okay, so number one, we're going to go over Tesla. Now, Tesla, I've been saying this on a repeat. I actually don't know how many times I could actually go over this anymore and start to lose some brain cells. So when we look at Tesla, you zoom in. Now, we came to 194 yesterday. We broke down. Also mentioned this. You broke down below those lows from yesterday. Now, if you had the greatest opportunity of a lifetime this morning to, again, go short. You gap down, you come back into previous lows mentioned from yesterday, retest 1, 2, and then you break back down to our next level, 182.5. Now on Tesla, what you're looking for is their next move is a break, retest, and continuation. That's what you want to see of 182.5. Under 182.5, you're looking for 180. Short, sweet, simple. I'm not looking to go long until maybe you get above 187, and then really to go long above 194. Simple as that. Now, Apple has been moving lackluster. I still like it over the long term, but again, short term, it's really just doing nothing. Above 190 is where you get really bullish. But what I will say here is you came right back into the 200 SMA. Again, very close to that range. So I'd be watching that like a hawk. If you get below that, you could see some downside. It could get ugly, but I'd definitely be watching that very, very closely. Value rack there, not getting crazy there. Amazon, on Amazon, very simple. We said if you break and hold. If you hold 171, you're bullish, right? We told you yesterday, you got the retest, you're bullish. Well, guess what happened? You broke down, you gapped down, right? You retested that level to the tick, 171, and you came all the way back down to 167 locally. So congratulations. If you reject off 171, it is a bearish trade to the downside. AMD, another good one on the list here. Now again, AMD, you're trading in a range. There's two levels you're interested in. You're interested in 174.7 and you're interested in 164.5. Now let me explain. This was your swing high when you broke above here, and this was your previous 2021 high, 164.5. Okay, so those are two major levels you have to be watching, right? You can see your breakout point right there. Okay, and this has been the only key levels you have to watch on AMD. So if you're looking to trade AMD, know this. If you go over 174.7, it's a long. So what are you looking for? Looking for a break, retest, continuation. Like you head back here, great trade. You broke down, crapped its pants. Now today you opened up, you touched the key level and you bounced out of it. Great buying opportunity. You've also had so many opportunities here. So we keep saying the same levels over and over. It's up to you to take advantage of those levels. So again, middle of this range, not looking to trade until we get back up here to retrade this range possible or to go long. So right, you're either trading the upside, the breakout, or you're trading back in this range. So look for a rejection of this level or a break and retest for continuation. Keep it very simple. Meta and Netflix. So Meta first. So Meta, again, we said if you broke below 165, you're looking for a downside. Now you had some good trades here. So you opened up lower, but then guess what happened? This is all mentioned yesterday. Go check the tape. So you're holding a level right here. You break down. Guess what? You lose VWAP, and then boom, you shoot back down. Had a trade opportunity there. Now, the real money-making opportunity is going to be if you break the lows here at 453. I don't know if we're going to break that. It would be pretty tough to do, but if you do, again, what are you looking for? Yes, repeat it with me. The break and the retest and continuation. That is what you're looking for. Don't complicate it. Keep it simple. Again, same strategies almost every day, except we're just looking at new names and how we're trading them in the overall direction of that said trend. Netflix is very similar to Meta, in my opinion. I'd be watching it, though. You're still operating in that kind of just channel to the downside. Now, for increased downside, what I'd be looking for is a break above the level or below level 543. You're pretty illiquid here since you gap trade up. Basically, you're looking for the break, retest, and continuation to the downside. Very simple. You're illiquid almost down into 500. That could get absolutely terrifying and ugly for buyers very quick. So that's what we're looking for there as well. Now, a few of the other names, let me make sure. Oh, Microsoft, very simple. This will actually wrap us up really quick. And I'm not talking about the first date. So when we go into Microsoft, again, the key level is 407, but you keep it very simple. Now today, again, we talked a lot about this. You broke below 407, easy trade to the downside. Now you're breaking back above it here in the after hours. The question is can you hold? If you hold above, you get a retest, you're looking to go long at that retest with tight stops. If you gap down below, right, very break, retest, and continuation to the downside. Specifically, if you break that bottom night around 405, you're looking down to 400, maybe a little bit like into 403, those previous lows here as well. Keep it simple. That's what we're looking at and not getting crazy. Remember, when we're looking to go short, I'm not looking to really swing here. I'm looking to make my money quick, get out of the market, and keep my cash. I don't want to hold overnight. Because why? Because the market has still been bullish. And if we look at the NQ, you can obviously see here on the daily, you are still making higher highs and higher lows, no matter what you're talking about or looking at. It's as simple as that. We don't want to overcomplicate it. It is what it is. And that's what it is right now. So again, still watching this. I want to see how the Fed comes out and talks about this. But until then, this is how I'm trading. These are my levels. That's a